Hi everybody, this is Paul Girard. I'm a student loan consultant working with the American Dental Education Association, and this repayment module is on the simple steps to help you choose a repayment strategy as you graduate from dental school. Now, some reminders as we start this short repayment module. First of all, there's never a penalty for early or aggressive repayment on your student loans. Regardless of what repayment plan you are in, you can overpay at any time that you like with no penalty. And in general, you can switch repayment plans with very few exceptions. Be sure you work very carefully with your loan servicer if you start in one plan and want to move to another plan or want to start aggressively paying on your student loans. In general, any voluntary or additional payments that you make over and above the required minimum for whatever repayment plan you're in can be targeted on your most expensive loan, and that can help you pay down your student loan debt faster. Now, there are three very simple steps to determining an effective repayment strategy for your student loans. First of all, be sure you know what you borrowed, who services your loans, in other words, who you're working with in repayment, and when the loans come due. Most of the loans that you have had from dental school will come due about 6 months after you graduate. Then identify and constantly review your repayment objectives. And then once you know what you borrowed, who you're working with, and when the loans are coming due, and you have a pretty good idea about how you want to go about doing this, then simply pick a repayment plan that will help you meet your repayment objectives. Now, we're going to look at each one of these briefly. First of all, your student loan portfolio. All of your federal loans, such as the Direct Unsubsidized and Direct Plus, can be found at the National Student Loan Data System at nslds.ed.gov. You don't manage your loans on this site. This is just a federal database that the loan servicers feed into, and this is a great place to get a look at all of your federal loans. In addition, some of the loan calculators, including the AAMC ADEA Dental Loan Organizer and Calculator, will allow you to upload your federal records straight from this site into the calculator. So all your federal loans at nslds.ed.gov. You can also get information on your loan servicers on this site if you're not familiar with who your loan servicers are. Speaking of which, you are likely going to have only one loan servicer for your federal direct loans. This is one reason many recent graduates are not needing to consolidate, because even though they have multiple loans, they are all with one loan servicer. So all your federal loans at nslds.ed.gov. You may also have some what are called campus-based loans. These are loans like federal Perkins, health profession student loans, and loans for disadvantaged students. If that's the case, you will have a different loan servicer for those loans, and your financial aid officer can help you determine who your loan servicer is. Your credit report can also help you. You should find all of your student loans listed on your credit report. You can get a free credit report at annualcreditreport.com. It includes, again, all of your student loans, federal, campus-based, and private. And you can always talk to the financial aid office where you went to school to see if they have a listing of all your loans that are not listed on NSLDS. Now, this is a listing of some of the different loans you may have in your student loan portfolio as a dental school graduate. We've highlighted Direct Unsubsidized and Direct Plus because these tend to be the two loans that make up the bulk of the majority of the borrowing for dental school graduates. The Direct Unsubsidized has a 6-month grace period, and as hopefully you know, the rates on these loans are fixed, but you likely have a different rate for every single Direct Unsubsidized loan you took out. The Direct Plus loans also have a 6-month window period. It's not called a grace period. It's called a 6-month post-enrollment deferment, but that simply means that these are also coming due about 6 months after you graduate. These also have fixed rates, and as hopefully you know, the Direct Plus loans always have higher rates than the Direct Unsubsidized loans. These loans also will have different rates for the past few years. So if you have multiple Direct Plus loans, these loans should be at different interest rates. This brings up something we mentioned on an earlier slide. if you adopt aggressive repayment, you can work with your loan servicer to target the additional payment on the most expensive loans, such as Direct Plus. Some of you may also, as we mentioned, have what are called campus-based loans, Federal Perkins, HPSL, and LDS loans. The terms and conditions of these loans vary by the loan program, so look at your promissory note or your disclosure statement or talk with your financial aid officer about the particular terms and conditions of these loans. And some of you may have private loans, perhaps not from dental school, but possibly from undergraduate or even a post-bac program. And once again, the terms and conditions of these loans will vary by the lender. Now, once you know what you've borrowed, who has your loans, and when the loans are coming due, the second step is to determine your own repayment objectives. Some of you may want to be aggressive in repayment to reduce the impact of the interest accrual and the capitalization of the interest. Remember, capitalization is where the accrued and unpaid interest is added back to the original principal amount. Aggressive repayment is characteristic of many of the dental school graduates that we speak with. You may, however, need to be cautious and need to protect your income and maximize your monthly cash flow. If that's the case, you may be using one of the income-driven repayment plans, and we have a separate module on income-driven repayment plans for you. You may be interested in maximizing forgiveness under the Public Service Loan Forgiveness Program if you're going to work in the nonprofit or public sector, including academic dentistry. And then some of you may be interested in getting repayment help in exchange for service through programs like the Armed Forces and the National Health Service Corps. Now, once you know what you've borrowed and who you're working with and when the loans are coming due, and you have a pretty good idea about how you want to go about repayment, step number 3 is to simply pick a repayment plan to help you meet those repayment objectives. And in general, there are 2 types of plans, time-driven and income-driven. The time-driven plans include the standard 10-year plan, 120 level payments, and the extended 25-year plan, 300 level payments. Remember, you can always overpay with no penalty. So some borrowers who cannot afford the standard 10-year plan will get into the extended 25-year plan and overpay to shorten the repayment period. No penalty for early repayment. Very important to remember that the monthly payments under time-driven plans have nothing whatsoever to do with income or family size, how you file your taxes, etc. That's one reason many borrowers who can afford them like the time-driven plans. But if you can't afford a time-driven repayment plan, you may be interested in what's called an IDR, an income-driven repayment plan, and we have a separate module on the ADEA site on the details of income-driven repayment plans. You see a number of them listed here. The most popular tend to be the most recent ones, pay-as-you-earn, known as Pay, and the newer version called Revised Pay-as-you-earn or Repay. We hope the information in this short repayment module will help you as you determine a repayment strategy for your student loans as you graduate from dental school. Good luck and best wishes from the American Dental Education Association.